technical indicators suggesting that we're looking at an all-share index nudging into overbought territory. What are you making of current valuations on offer?
Hi, Alishia. Basically, we still believe there's a lot of value in Nigeria, a lot of value in the all-share index, where you find a lot of companies trading at single-digit earnings ratios and less than one price-to-book ratios. We believe that there is significant value still to be had in this market. And where you look at comparable markets like Kenya that have appreciated probably well over 50% this year, Nigeria is still lagging behind there, having appreciated some northwards of, say, 20% this year so far. And we believe that there's still value to be had.
Well, Q3 results season proving to be better than either the first quarter or the second, although there are a few weaker than expected results. Overall, what have been your impressions of the overall earnings season thus far? And I'm talking across sectors here, very broad-based.
Right. Basically, some of the things that we've seen, well, on the top line, we've seen that turnover really has underperformed. Some banks have obviously done better than others. So the likes of First Bank and GT Bank have done better than we expected. But the likes of UBA and maybe the second-tier banks, Diamond, FCMB, have largely underperformed on the top line. We're also seeing write-backs and we're also seeing operational efficiencies as well, where the banks have been focusing on operational efficiencies. They've tried to, well, you know the adage saying, if you can't increase your top line, you better cut your costs. So they're trying to cut their costs and they're trying to boost their bottom line. And that's what we've seen across the market.
David, let's hone in on First Bank there, because some had come across yesterday saying that those numbers underperformed in terms of what they had been hoping for. And what was highlighted was that while we saw the bank's loan book continuing to grow, interestingly enough, that interest margins have not been growing in tandem. I mean, what have you made of that?
First Bank had some good bits, and obviously they've got some things that they need to improve on as well. Well, as I said earlier, the top line did better than peers. So if you look at historically or where investors expect the company to end up at the end of the year, they haven't reached or attained the milestone. However, if you compare them to their peers, they have actually performed better than their peers. Also, if you look at the PBT and the PAT, they've also performed better than peers as well. And ROEs are looking about 14.5% compared to a peer average of around, say, 11 or 12%, and, say, a sector average of around 8%. So First Bank, really, if you look at the totality of their results, they've actually been better than expected, or better than peers. Though we still expect that they might fall short of the guidance they provided to us.
Let's look at a strategy that seems to be surfacing, and I don't know how true it is, but certainly on the surface it seems to be there, that they're looking at building a strategy around current low interest rate environment that could let them down further down the line. I mean, what's your thoughts there? Because the size of loan provisions have not reduced to the extent that one would have hoped to see it come down.
Well, the loan growth at First Bank has probably been around 5%. If you consider First Bank being obviously the largest bank in Nigeria and they are a net placer in the interbank market, higher CBN interest rates will benefit them. However, I do also think that their cost of funds will also increase, especially given rising interest rates in the economy at the moment. You've seen the yield curve rise probably around 300–400% anyway, So I reckon that, they may find it difficult passing some of the costs on to their customers in terms of loan interest rates. However, I do believe that First Bank should be all right.
In the meantime, rescued banks have recorded impressive rallies during the last few weeks. Oceanic Bank, a case in point there, it's recorded 112% price appreciation in just 22 days. And what are you making of all the optimism regarding the possible turnarounds that could come to the fore at these banks?
You know, in the past, I was very skeptical about these, about, you know, how quickly the Emcon will be formed and how quickly you would see companies being taken, or bad loans being taken off these companies. However, now that the former MD of Oceanic Bank came forth and said she would, you know, some of the related party loans would be offset. You know, you reckon that there's negative shareholders funds could be substantially improved, and for that reason, I believe speculators are piling into these, call them bad banks or banks that fail the test, the stress test.
Mm-hmm.
You know, so we believe there's a speculative play involved in there. We also believe that some of the parties who may want to buy some of these banks may be positioning as well.
Let's take a look at Emcon. We've heard an announcement at the end of late last week that the Emcon board would be appointed today. From there on out, is it all cylinders go in terms of the start of the process of purchasing bad assets?
I would wish so. I would wish so. The only thing is, you have to bear in mind that we're going into an election year, and a lot of focus will be on politics as well. You know, but I remember the finance minister saying that he would very much like the process to be politics free. You know, and the CBN governor has also said that he expects that once the members of the board of Emcon are approved, right, they will commence work. So how quickly they would buy back these assets are what I'm not sure about.